In other news, South Korean retail investors have been betting big on U.S. stocks with their holdings soaring past 250 trillion won, and authorities here are now hoping to lure them back. Our Kim Jun-hong reports.
South Korean retail investors are ramping up overseas stock purchases despite currency pressure. Data from the Korea Securities Depository show the holdings surpassed 250 trillion won, or about $170.5 billion as of last Thursday, up nearly $6.9 billion in just 2 weeks. As overseas stock buying accelerates, the authorities are rolling out tax incentives to draw investor funds back home. The Ministry of Economy and Finance unveiled a package of tax incentives on Tuesday, aimed at boosting the domestic capital market. As part of the plan, the government will offer tax incentives to long-term investors in its National Growth Fund, set to be launched in the first half of the year. Investors who maintain their investment for at least 3 years will qualify for income tax deductions of up to 40%, with dividends taxed separately at 9%. Details were also spelled out for reshoring investment accounts. Investors who sell overseas shares and reinvest the proceeds in domestic stocks through these accounts will receive temporary tax breaks on capital gains. Despite the incentives, experts see a limited short-term impact as state-backed funds are geared toward long-term investments, while overseas stocks attract investors seeking quick gains.
Most retail investors in U.S. markets focus on short-term gains, which makes government-led policies less appealing. For these measures to work, the government needs to maintain a consistent policy stance and build trust that the market is worth investing in.
The government is also weighing the introduction of higher leverage investment products, loosening the current 2x cap to steer risk-hungry investors back from overseas markets to domestic stocks. Kim Jun-hong, Arirang News.